Ahoy there, trader, and welcome back. This is the Anti-Investor Stocks and Options Trading Podcast. Trading is hard, but today, let's make it easy. I'll be breaking down some of the stock market's hardest challenges, and today I'm going to be talking about continuous learning for traders and the keys to staying ahead. So, welcome back to the Anti-Investor podcast, where we talk about what really works and consistently wins at trading the financial markets. My goal is to give you the right tools, the correct rules, the software to assist you, a community to support you, and if you'll allow me to be a mentor to show you the way, so that you get real results in the fastest and smartest possible way. So then, in the fast-paced world of trading, staying informed and educated is important. It's very easy to practice the same thing over and over again without evolving as a trader. So keeping educated and informed to help you with different perspectives, different viewpoints is critical. So continuous learning, it's not just about keeping up with what's going on in the moment, but it's also about staying ahead of the curve. So some strategies that you can deploy. Again, market research. I've always got a little bit of a research project going on, and I'm typically looking at market research. From my point of view, I just need a shallow dive. I'm not big on the fundamental side of trading and investing. I just really want to know when the big news items are. And again, I'll just catch the headlines. And thankfully these days, there's plenty of newsletters out there that will give you skimmable information, which is all I want. Again, I don't want to sit down and spend hours doing the market research, but it just gives me a snapshot of the financial news, maybe some market analysis, just a big picture overview, and just so that I've got an awareness of industry trends and maybe some fundamentals. From a practical standpoint, I don't need to know when those things are, so this is just a personal preference thing. It's not important to deploy my strategy 99.99% of the time, as long as I'm not stepping in front of the bus, as I like to call it, with, say, news events. Again, the big ones, for example, non-farm payrolls, first Friday of every month. As long as I'm not placing trade 2 minutes before a red flag news item, then I should be fine. And that's really all I need to know on a regular basis. And again, it's just personal preference at the moment that I like to have a little bit of an appraisal of the headlines and just what has been moving and catching people's attention. There may be some opportunities, but practically it's not something I need to do on a day-to-day basis. Online courses, again, enrolling classes related to finance, market analysis, trading strategies. I've just done one from a systematic, more of a programming course, I suppose it would be fair to say. I'm not a programmer by any means, and I've got, in fairness, no intention of becoming a coder. I think I've just let it go far too long. I have no interest in it whatsoever, other than from a trading perspective. So what I have done is just enrolled in a basics program, and really that's just to help me describe things to the program and to understand what can be done with the various programming languages, because a lot of my initial questions when I'm developing ideas and strategies and tools to assist me with trading is I'm firstly just fielding the basic questions from a program of, could something like this be done? And so trying to answer those questions myself is one thing that I've done. So again, enrolling courses, again, if finance is brand new for you, maybe just a basic and very generalized finance course would be beneficial. Again, if you're going to go down the fundamental routes, there's fundamental courses. Again, there's plenty of marketplaces online today that offer low cost, no cost, and there's obviously also YouTube. There's plenty of people out there, including myself, that put out a lot of information to help new traders come up behind them and just try and give back to the community. You can also read trading books and journals. Again, there's plenty of books. Before the interwebs were out there, it was all in a book. We had to do lots of book learning. Dive into successful trader books, market analysis. A magazine that I used to like and had a subscription for many, many years to was the Technical Analysis of Stocks and Commodities. Bit of a mouthful, but nonetheless, they have some great articles, even in their archives today. They would often share codes, snippets and algorithms based on the articles that were in the magazine. There's obviously some great interviews there with some fabulous traders who may not be commonly known or popularly known in our trading world. Ultimately, you can apply yourself to webinars and workshops, either in person or online. Again, there's something somewhere around the world these days. Again, whether you're into the crypto, the bonds, the futures, the stocks, the UK markets, European markets, Asia, emerging markets, obviously the US markets, which is where my attention is. There's something somewhere most days of the week around the world these days. Again, there's plenty of information out there, almost to the point of view that could be a little bit of an overload. But stick to the things that are relevant to what you're doing. And I think I would also look at non-industry related things. I mean, I've had plenty of ideas from the world of science. I read a lot of science fiction, science facts, and occasionally in those books are futurist type concepts. So, you can get ideas and inspiration for trading ideas or refinements or just how to be a better person, from, non-standard places. We've also talked about networking, join forums, communities, exchange ideas, have a peer group around you. If there's not one that you like, start one. That's what I did back in the, quite literally 2000, 2001. Space Odysseys were not included back then. But nonetheless, that was what I did. I got involved in trader communities. I found my own little corner of the internet. It turned out a lot of people were following me. I didn't realise. Eventually, I got people started to ask me, how do I do what I do? I didn't realise that they weren't successful. It was just the naivety of me, perhaps back then. But nonetheless, there's plenty of opportunities to network and have peer groups, again, in person or online. I also spend a lot of time, again, I mentioned earlier, with a research project. I've got one right now. I've usually got 3 or 4 on the sidelines, but I've always got something to keep my idle fingers busy. Looking through historical analysis, look at the past market, study trends, and a lot of the time it will validate maybe some throwaway comments, like a market crash. Everyone's scared of market crashes, and just having a curious mind, or like, why are people scared of market crashes? So that became a historical study, and one of the things that came out of that from just looking back over the last 50 years was that there's crashes and corrections. They happen with a regular and reliable frequency. Corrections, which can be defined as anything over 10% and under 20% in a 10-day period or 10 to 15-day period. That's what I quantified it as. So a big move in a short space of time. They happen, once on average every year. And usually, most years, there's some corrective movements, sharp corrective movements, flash crashes, sometimes how people describe them. And there's a season for them. It's February, March, which is where we are right now. I'm recording this on the 16th of March. I'm expecting a corrective move imminently. And if we don't have one in the next, or the start of one in the next 5 or 6 days, then the window for that is closed, and I'll be looking towards September, October as the next window. And as I mentioned several times on previous podcasts, we didn't have a corrective move in 2023. And again, if you listen to this in the future, this is 2024, obviously. So we didn't have one last year, so I'm expecting one this year. And the longer we go without one, then the harder and faster it's probably going to be. They obviously lead into crashes. So a crash is defined as anything greater than 20% in a short space of time. That being defined as about 15 days. So big move in a short space of time, again greater than 20%, and they happen about once every 10 years. So the reality is a crash is really nothing to be fearful over, and that's the single biggest concern for most people when they start talking about investing and worried about a market crash and worried about being on the wrong side of it. Well, the reality is it's probably nothing to worry about, and there's usually plenty of warning bells and signs along the way. So anyway, historical analysis, study past market trends, understand how certain events can impact the market or even your trading strategies. And lastly, along the lines of continuous improvements, again, we've spent a whole episode talking about it, but personal trading review, regularly analyze your own trades and understand what works and what didn't, and try and get to the bottom of, like, was it me, was it the market, or was it the strategy? Again, we spent a lot of time on those three questions, and they're interwoven, but it just helps keep you on the straight and narrow. Again, keeping a track of your personal track record is an absolute bare minimum requirement. Are you meeting the benchmark? And having a systematic rule-based approach to follow means that you've got an algorithm, so there's no ambiguity with what the system should have performed like theoretically, and then you can say, okay, well, why did I do it? Maybe you weren't at the desk that day, maybe there was an explosive movement which you were on, or or it went against you. There might be anomalies and justifiable reasons why you're over or underperforming your strategy at that given moment. Some non-conventional learning methods. Again, most traders won't do the next steps, but it will be the fastest path to your success. Again, going slower is going faster. So simulated trading, this wasn't a thing. Paper trading is maybe known by another name, but use simulators to practice strategies without financial risk. This is great, especially when you're at the newer end of the learning curve. You get to push all the buttons and learn the technology that you're on or using, or test out the idea without having to worry about any financial risk. So it is a great way to get going. And again, if all of it's new for you, then you don't have to worry about pressing the wrong button or doing a fat-fingered trade. And instead of doing a Johnny one lot, you've done 500 contracts. I have placed ridiculously sized trades before because I added an extra zero to the order that I was placing. So it's very easy to do if you're not familiar with the platforms and the brokerages that you're using. So again, you can push all the buttons without fear of blowing up, just through complete human error. You can also go down the track of mentorship programs. Learn directly under the guidance of experienced traders. Again, I offer these. There's plenty of other people out there that offer great programs. And as we've said several times in the past, the hard part isn't the system. It's finding the system that's right for you and what you're looking for. So a good way of approaching this is not to think about who do you see making money with a strategy. It's like, how do you envisage trading to be for you? If you want to sit there, from first thing in the morning to from the opening bell to the closing bell, and be pushing that button, 100, 200, 300 times, scalping the markets in and out for pennies, then I'm not your person. Similarly, if you imagine that trading and investing for you is to sit back, you buy stock in it like Warren Buffett, and in 5 years, in 10 years time, you'll be collecting dividends, and the capital appreciation will be there, and you've got this long-term buy and hold mentality. Again, I'm not your person for that. So how do you imagine trading for you? Again, I want a relaxed approach. I want minimal screen time and maximum opportunities. I want all the benefits of investing from a hands-off point of view, whilst at the same time all the benefits of the active trader side of things. So that's this hybrid where I land in between. I want to be able to check in, check for trades, and check out, and not have to be glued to the screen monitoring trades or checking for trades. I'm looking for one good trade in the day, one good trade in the week, and one good trade in the month, so that I can get paid daily, weekly, and monthly. And that's really what I'm looking for, just one good, high quality, high probability setup. And again, that's the way that I approach the markets, because then that means that again, I'm already planning what I'm going to be doing this week. I've got the trades, I can do it on mobile phones. More importantly, I'm thinking about where am I going to go this week? What am I going to do? What adventure am I going to have away from the big city life? I like to go hiking, we like to go and visit zoos, we like to again get out and enjoy nature. So that's what we're planning for this week. And that style of trading allows me that time freedom to be able to do whatever I want to do. And again, lastly, in the non-conventional method section is behavioral economics. Explore how psychology affects the market movements. Again, a great way to think about this side of things is that we're essentially assessing crowd psychology, and the pretty little charts that you look at are a visual representation of crowd psychology. There's more buyers than sellers, the stock's going to go up, or the instrument that you're looking at should go up. More sellers than buyers, then the market should go down. And again, that's going to be visually represented as a chart going up and down, ebbing and flowing back and forth. And if there's, over the long term, more buyers than sellers, but there's periods of more sellers than buyers, these are dips in the context of an uptrend. So just changing the wording and the verbiage to put it into more of a crowd behavior psychology viewpoints. It might just put a different perspective or a different spin on how the markets unfold, and maybe give you a depth of understanding and appreciation that you didn't otherwise have previously. Right then, so continuous learning in trading involves a mix of traditional research and practical hands-on experience. So diversifying your learning approach from keeping up with the markets to engaging in simulated trading, paper trading for want of a better name, seeking mentorship. Traders can deepen their understanding of the markets, refine strategies, and adapt to the ever-changing financial landscape. And this commitment to learning is what sets apart successful traders from everyone else. Again, I'm no different. I've always got a research project, at the very least as an absolute minimum. I'm always trying to hone my skills, sharpen my edge, develop strategies. Maybe the strategy I'm developing is better than a previous one. And I've just gone through that quite radical evolution of my own trading. Again, I've predominantly been a breakout and trend trader all my life, and with the introduction of zero-day options, I was able to find this hybrid in between where I can get daily income, so I don't have to wait to the end of the month or the end of the quarter to get paid the amount that I want. It's literally the end of the day or the end of the week now because of zero-day options, the short-term trading instrument that just wasn't available 5 years ago in the way that it's available today. Every day there is an opportunity to profit in a very hands-off way. So this is something that is quite literally brand new and never been seen before. Again, as I'm coming up to the end of this little mini-series, I will be explaining in the next 2 or 3 episodes probably the daily income system that I've touched on several times here. So I think this is the last one today of this 12-part series. So I'll start talking more about the zero-day option side of things and the new strategy that I have, to be fair, quite literally changed. Anyway, enough of my rambling. If you like what you've heard today, be sure to follow and listen to the very first episode where I map out the first of several of my most profitable money-making and more specifically trend trading strategies. If you'd like to learn more about my training and mentorships or the daily income system that I just touched on, you can head over to antivestor.com, or you can shoot me an email to phil@antivestor.com and let's start the conversation. I've always got a lot of time for serious traders. What I do isn't right for everyone, and at the very least I'll point you off in the right direction. So that's all for today. Thank you for giving me your time and attention and making me a part of your regular routine. Have a wonderful day, and I'll speak to you at the same time next time. Toodaloo trader, bye for now. Keep in mind that futures, options on futures, stocks and stock option trading involve a degree of risk that may not be suitable for all investors. There is a risk of loss in every investment that you make, and it's your responsibility to assess the risks of your decisions. Past performance is no guarantee of future performance, and Antivestor provides educational information and does not provide financial advice.